Hello guys, good afternoon. Today is Saturday. I'm gonna be going over the week's price action, what I did, how it went, anything that is basically worth mentioning about the week's price action. We will begin with week's forecast, the analysis that I sent about what I'm expecting about this week through, as you can see, my Telegram. And we begin with this image, right, where we have that I was expecting price to go higher, take previous week's high, maybe mitigate a daily fair value gap, mitigate the on previous week's high. We were also mitigating a weekly order fair value gap, and I was expecting both of these things to be mitigated, to them price continuing lower. And as you can see here, major time frame trend is clearly still bullish. We've had a pretty aggressive bullish week, which in my opinion was simply the beginning of a retracement much needed, which from my point of view could easily end through this week, continuing lower for the rest of it. Ideally, we see price starting the week bullishly, taking the buy side liquidity above previous week's high, mitigating a weekly fair value gap, and mitigating up to a daily fair value gap to see lower prices, to then see lower prices and potentially below previous week's low, which actually I don't think we got down to. No, I don't know, we didn't. But that's basically what I was expecting. And as you can see, you can read, well, basically you do have it on my Telegram. And this is like the bullish example I was somewhat expecting. If we were going to be bullish, this is what I needed. And you can read here from the daily chart where you have reasons to be bullish and so on and so forth. Because I didn't really believe in any way we could actually get a bullish week, an entirely bullish week, so I was expecting bearish price action. Yeah, that's pretty much it. Also the news and everything, which sadly Friday we had NFP Friday, which means that we could not trade at all. So let's look at it from this way, from this perspective. Look at price action Monday. We're trading between 8:30 and 10, or up to 11 as I tend to, right? Let's look into this. This is 8:30. This is 10. 8:30 opens here, starts trading lower, goes aggressively higher, right? Does it take sell side liquidity? No. This impulse back here doesn't take, well, the impulse that I mean, like this impulse here doesn't take sell side liquidity unless we count this, but it's not enough in my opinion. Range, aggression, retracement, aggression, retracement, aggression, retracement. But the thing is that this move lower doesn't take sell side liquidity, so I cannot look into this. Now, this move higher, right, does take buy side liquidity, reacts to a 5-minute fair value gap, starts going lower, creates a fair value gap, right? But as you can see, it doesn't actually cause a market shift. So we don't really have the, what I call the 5 steps, right? I'm actually pull them up. So that's what we're looking for, right? So we get step 1, 2, well, just one, run and stops. We do see displacement in the 5-minute, but we don't see a market shift, so that's not a complete step 2. Then we see aggression higher once again. We do get an entry here, but as you can see, it does fail later. And also again, this didn't take sell side liquidity from the 5-minute, so there's nothing that I can do. Price goes aggressively higher, takes buy side liquidity again, goes aggressively lower. What do we have now? Run and stops, market shift, fair value gap, right? That's good enough for us. So we can look for lower time for opportunities in here, but also we do have a run sell side liquidity. But as you can see here, we actually do not get a 5-minute fair value gap to go to look for an entry inside of this price action. We also had news at 10, so we would have avoided 10 a.m. completely. So probably would have missed out an opportunity even if it showed up, right? So we do have this fair value gap created through this market shift, and the runs the sell side liquidity. So in here we could have looked for for buys. So let's look into that. Cool. So remember that we were able to look for sells inside of this fair value gap that I think is from this or one of these lows, one of these highs, sorry. The thing is that price mitigates that fair value gap, and as you can see, if we're looking for this in the lower time frames for a fair value gap to create a market shift, we don't have a fair value gap. We do have multiple market shifts, but nothing for us to actually take advantage of, right? As you can see, at this point, it had been already pretty range of price action. We hadn't really moved below this low nor above this high, right? Pretty clear range already, and nothing for us to really do about it, right? Simple as that. Now, it does pull away quite aggressively, mitigates a 5-minute fair value gap, right? Do we get an entry? Yes, but here's the thing. The market shift is all the way up here, right? So price has to move all of this price action. This is the market shift with this candle. So if we wanted to execute a list, I want to have my entry on this one. right? Because my stop loss has to be below this low anyways. Whatever I decide to enter, either it is on this fair value gap, on this one, on this one, on this one, whichever I actually choose, I need my stop loss to be all the way down here to have a safe stop loss, right? If the move is going to work out, ideally this low is not taken, right? Price goes aggressively higher, retraces. I do believe we get a 5 minutes. I do believe we get a 5 minute fair value gap up there. Yeah. As an example, this is another thing that we could have looked for buying opportunities as well. But after news, after aggressive news, and after a day that price has been going aggressively higher, I don't really like to trade. We got really good confidences. This move doesn't get to 50%, so we can use it like this. And as you can see, it's pretty high up, right? And it's just definitely not ideal. But it does give an entry, right? Actually, it doesn't. It does, but it doesn't. So we have the market shift, entry, potential loss, liquidity, aggression higher, entry. Well, actually not entry, fair value gap. No market shift, nothing for me to do. So this does work out, but it doesn't happen. I would have not taken it basically. And then we have this market shift and this fair value gap with the stop loss all the way down here. So you can see it goes higher from that. Not for a long time, but definitely does go higher than that. That's basically Monday. So you can see nothing really happened, nothing important, nothing for us to use. So if you just analyze the day's price action by looking at the 5 steps or the first 2 steps, honestly, you can already know if the session actually gave us something or not. Same thing with this one, price going aggressively higher. We do have a tiny run of sell side liquidity here. Not ideal, but it's something, right? Ranges aggressively higher, retraces, impulse, retracement, impulse, retracement. We could say that there's a run and sell side liquidity here, but there's no fair value gap in here before this market shift, right? And the one that is actually created is all the way up there. And at the end of 11 a.m., not even at 10 a.m. So nothing for me to really do on Tuesday either. And Wednesday is the only day that I actually traded, and the only trade that I would have taken this week with my funded and or challenges account. Because what I believe happened was that the high of the week had been created by, well, basically through the PM session in New York, right? New York's PM session around 2 p.m. And all that. So we had multiple runs on buy side liquidity. First, again, on the afternoon session, PM session on New York. Then through Asia session, we see somewhat of a couple of moves, a couple of highs being created, multiple highs being created through midnight's price action as well. As you can see, price trades aggressively higher above all of that, takes all of that. And as you can see, it starts trading aggressively lower, right? So at this point, I would believe that the week was going to be bearish. At this point, I believe that the day could likely be bearish as well. So weekly and daily bias for me was bearish in both sides. So all that I really wanted to see is trend continuing lower, and that's when I started looking for the 5 steps, right? I have a run and stops. We look for the run and stops, right? Which in this case was about that high, right? Then the market shift and the displacement, right? So the creation of the fair value gap along with the market shift right here. Price trades back into that, and the lower time frame opportunity was, could have taken it, oh, this one. I don't think there was any other way to execute this with the entry in here, but this stop loss was a little bit of an issue because through the session, this fair value gap here, tiny one, was not mitigated as it's shown on this, right? So the weeks after the market, or after a couple of hours, I don't know how it works, basically the weeks are changed, right? So through the day's price action, this fair value gap was not mitigated, but after the market does show it like mitigated. If I knew that this was mitigated, my stop loss would have been just about this high, right? Theoretically, it shouldn't go above that, as we have like swing high, swing low, swing high, swing low, and so on and so forth. And the fair value gap, basically, right? That's the execution. Those will be exactly the 5 steps, the exact thing that I look for. And target was, what was target? Yesterday's low? Don't remember. Oh, Tuesday's low was really low though. No, and it wasn't the target because as you can see, actually it doesn't validate the trade right then. I had a target, oh, 50% of Tuesday simples, which was 5.10, 5.05 or something like that. Basically, right on that wick. Yeah, I think it was a little bit less though. That's fine. You can see the resume on this day. I think I actually did the post-market analysis in a live trading video showing the execution live. So if that's something you want to see, it's on my YouTube. Okay, so Thursday, the last trade of the last day of the week, although we will talk about Friday. We didn't really get much, and actually because we did get the steps, but we missed out on third. Third is literally the one that fucked us up on Thursday, because as you can see, price is going lower. We're just looking for bearish price action already. We have a couple of runs on buy side liquidity. Price mitigates this tiny bit of a fair value gap in there. Even the lower time frame inside this 5-minute fair value gap didn't work out. Not that it didn't work out, it didn't give us the entry that we were looking for. So we have price going higher aggressively. We have run on buy side liquidity above the high, although I don't really like it as liquidity, if I can be honest. Right, price takes all of that buy side liquidity, mitigates a another fair value gap, right? Not necessary, but definitely good when it happens. And if we go to timing wise, this is a FEDI. So as you can see, it opens, it starts trading higher, right? So it's a little bit of power of 3 concept in that. It's higher, mitigates a 5-minute fair value gap, takes buy side liquidity, starts trading aggressively lower. So we have 1, 2 with this market shift, and this one fair value gap, this fair value gap. But as you can see, price never trades back into any of those, right? We do get entries later that we'll discuss now, but these are the 2 fair value gaps, because remember that we're looking for a fair value gap to show up between this high and this low, right? This is the area where we're looking for fair value gaps, and if it doesn't happen, then it doesn't happen. But as an example, we do have a fair value gap here, and the reason why I didn't take this is because it's too low. First of all, it's at a bad premium discount, and I do believe that the lower time frame entry was a bit complicated. Yeah, because as you can see, the lower time frame opportunity is created by breaking, well, this low or this low, whichever, right? Because we have higher high, higher low. Yeah, higher low. Kind of a higher high with this, or an attempt at a higher high or a lower high, and then the lower low, right? So, yeah. But as you can see, it's not mitigated for a bit, and then it's mitigated here, right? And it definitely works out. I did take a little bit of a paper train, if I remember correctly. I showed it through the Telegram, and I don't really remember what I was targeting, but by far we definitely get. Ideally, we'd go for a day's low, but we're definitely below Wednesday's lows already. So this is an example of the day where we get basically every single confluence that we look for, except the most important ones, honestly. And it works out in every way, but it's just not what we look for. Run on buy side liquidity. This is NFP, 5-minute fair value gap. Market shift either in this low or that low, whatever you feel most comfortable with. Let's trace into that. We could have looked for 1-minute entries, and we do actually get one. And I did take an entry on this, again, shared through Telegram. And that is this. Higher high, higher low, higher high, higher low, right? Higher high, higher low, higher high, lower low, right? So it's a fair value gap. If you don't want to count that as a market shift, then you have this one, which will be, as far as I go, waiting for a better market shift, basically. And this was simply, if we count this market shift, theoretically price should trade above this low, right? But my entry would have been on the fair value gap either way, so we'll do it like that. And the stop is all the way up here, because you never know what can happen. I don't think this one actually traded above that. No, it doesn't. As you can see, it doesn't trade above this high, which theoretically shouldn't, you know, but sometimes it happens and still respects price action. So, yeah. I was targeting this. Well, I wasn't targeting this because I didn't trade this, but I would have targeted that low. But as you can see, that's 8R. As I've mentioned a couple of times already, when I have large targets, I just look for 5R or something close to that. As an example, this low looks like really nice liquidity. It also has another low, basically equal lows just hanging there to be taken. So ideally, I could use that. And as you can see, that's 5.9, that's 6R. That's definitely something that I can do. Or if I wanted to be more conservative, I could say, let's go just below that low, right? But I don't get 4R, but it is quite close. So that's something, again, that I could have done, right? You can see how price takes the liquidity, right? Takes the liquidity, starts to retrace, even changes a trend. We have a market, so we have a market shift or value gap, everything. So it's something that I prefer not to be into. I prefer not to be into a trade that has to retrace a lot and do a lot of stuff before actually getting to target. So my target would have been 4R plus 3 ticks. That's 4R exactly. Plus 3 ticks. That's 291. Would have been taken out there. Sadly, I would have taken a good amount of time and would have been painful to see, but definitely would have closed on partials around a 1 to a 3, so understandably would have been fine. And that is pretty much it. Even Friday, which is not a tradable day in my opinion due to NFP, we got opportunities to trade the way that I do, and it's lovely to see that. Didn't trade it again, wasn't interested on it. And this week, if I was trading on my challenge and funded accounts, I would have been done with Wednesday's trade, right? Because even though it's just a 3% that I would have taken in profits, 3% or 4%. I don't remember if that's the one that I messed up. I think that's the one that I messed up with the risk. So I think it would have been a 3% on my account, maybe even less than that. But I would have been fine with it, right? I would have been fine. I would have taken that. I would have been done for the week, and that's pretty much it, really. If I have, as an example, Monday and Tuesday, we didn't have trades at all, right? And then Monday give us an opportunity, and that opportunity we take, and that opportunity works out, I'm done for the week, right? Because it's been a really quiet week so far. We're already middle of the week, and we get one opportunity, works out great. I'm really not going to do much more than that, honestly. Ideally, we'd see more than 3%, right? As a bare minimum, I like seeing 4% per trade. Ideally 5%, that's my goal, but if I can get 4R out of a trade, I'm pretty happy about that. And that is really pretty much it. Lovely week. Basically 100% profit, not profitable, 100% win rate, but well, it was just one trade, so can't really count that. And that's pretty much it. Hope you enjoyed this little bit of a short week resume. Lovely week in my opinion, just like previous one. And that's pretty much it.